What's going on, guys? This is Chandler Smith, and in today's video, I'm gonna show you everything you need to know before investing in real estate in 2020. I'm also gonna show you the things that you need to make sure that you avoid so that you don't get taken advantage of, end up losing money, or end up investing in the wrong thing. So with all of that being said, let's jump into it. All right, guys, it has been a crazy year. Like, there's nothing else to say about it. This year has been absolutely insane. And what all new investors and experienced investors are asking is, hey, is right now a good time to invest in real estate? And so in this video, I'm gonna talk about all of that. I'm also gonna talk about the shortcomings of investing right now. But for those of you that are asking, Chandler, is right now a good time to invest in real estate? The answer to that question is the same answer as the question to whether or not you should smash that like button. And the answer to both of them is yes. So make sure you smash that like button and make sure that you understand that there is no better time to invest than right now. And the reason for that is for the risk involved in investing in real estate, you can find no better investment when you weigh out risk to reward than investing in real estate. Now, here's the deal. The market goes like this, all right? It always has, it always will. However, it's more like this. It's always trending up. And so if you're investing properly, I promise you there is no better time than now. And that will always be the answer when it comes to whether you should invest or not. And here's the reason why. When you invest in real estate, you literally get a return in 4 different ways. First off, you're gonna be getting cash flow. Now, cash flow is essentially when you've spent your money on your mortgage, when you've spent money on all of your expenses, your management, insurance, every expense possible you might have. Once you've spent that and you get the rents back, your cash flow is what's coming off of the top. So your rents come in, all your expenses go out, and what's left is your cash flow. And if you're investing properly, that cash flow should be a 15% return on your initial investment. So right off, that 15% return smokes anything else you're going to find at this risk level in the stock market or anywhere else. No one is going to say, hey, for pretty low risk, you can get a 15% return on your money. That just doesn't happen. But here's the deal. With almost no risk in real estate, that happens consistently and has happened consistently for me year after year after year, even in crazy years like this. So I'm telling you right off, again, there is no better investment. And the first reason for this is because of the cash flow created through investing in real estate. The next huge reason you need to be investing in real estate is appreciation. And essentially what appreciation is it's the fact that your property will go up in value every single year. And on average, it's going to go up between 3 and 5%. The thing that's so cool about this is if you're using leverage. So for example, if you're using a loan to buy a property, let's say you buy a $100,000 property and you buy it with only 25% down, so $25,000. If you're getting 3% appreciation every single year, that ends up being an additional $3,000 in added value that you have in equity in your property every single year. And it's more than 3% because once your property goes up to $103,000, it's gonna be 3% on that and then 3% on that. So every year your property is becoming worth more exponentially. And the thing that's so cool is it isn't a 3% return. It's a 3% return times 4 because you only have $25,000 invested, which is 1/4 of $100,000. That means it's really a 12% return every single year. So now you've got a 15% return in cash flow. You've got a 12% return in appreciation. And I'm sure at this point you're saying, holy crap, there is no better investment than investing in real estate. But here's the deal. You also have principal paydown and tax benefits. Now, your principal paydown is going to be a huge return as well, and that is also going to get exponentially better because as you pay off the loan on your property, so back to the example of the $100,000 property, you have $75,000 you borrowed. And so in that $75,000, every year you are paying more and more off towards your principal, and the interest amount of your payment that's locked is getting smaller and smaller. So again, that is an exponential return, and then you're going to save a ton of money on taxes. If you make $100,000 as an accountant and $100,000 as a real estate investor, you're gonna pay way less as a real estate investor than you do as an accountant. Now, the reason I love this example is that goes for anyone who is in a W-2 job or even a 1099 job in comparison to investing in real estate. But I like using the accountant as the example because they are smart. They know how taxes work. But still, if you make $100,000 investing in real estate compared to $100,000 as an accountant, even though the accountant is smarter with taxes than the real estate investor, obviously you're hiring an accountant if you're a real estate investor. My point is you're gonna save a ton more in taxes making the same amount of money investing in real estate. So now you've got cash flow, you've got appreciation, you've got principal pay down, you've got huge tax benefits, and your return on your money is absolutely insane, and it is exponential every single year. And so from my perspective, there is never a time where investing in real estate isn't the best investment. When you look at any other investment, I'm gonna bet on real estate over anything else every single time because the return you get from all of these different returns is absolutely incredible. Now, I'm sure there are a ton of you saying, Chandler, what am I missing? This sounds way too good to be true. That sounds like a return like I've never heard of before. But the reality is there are tons of real estate investors that are getting that return and more. Now, that doesn't mean that if you just go and buy any piece of real estate, you're going to get that return. And that's where so many people get beat up and taken advantage of and end up losing money or investing in an absolutely terrible investment. And it's because they don't understand how to invest in real estate properly. So for the remainder of the video, I'm gonna dive into the things you need to make sure you do and make sure you avoid so that you can get the huge returns I'm talking about and not end up getting taken advantage of and losing money in the process. The biggest, most important thing when it comes to making sure that you get a huge return investing in real estate in comparison to losing money or ending up in a crappy investment is that you get your numbers right. Now, this is a very broad answer, but this is everything. If you get your numbers right, there is absolutely no better investment than investing in real estate. Now, I know a lot of you are saying, well, Chandler, what does that mean? What do I need to do to get my numbers right? And so here are the three big factors of making sure that your numbers work so that in any market, including the market we're dealing with right now in 2020, you can know that you're investing properly because your numbers work. Number one, you have got to know your market. And I think this is where so many people get off track because they say, Chandler, I know the market. Right now, the market's crazy. There's all kinds of crazy stuff going on. I don't want to invest in this market. In any market, whether it's the best US market ever or the worst US market ever, there are winners and there are losers. And what I mean by this is right now in the United States, there are markets that are going to get smashed. And there are markets that are going to excel and do extremely well. And there are markets that are going to get smashed and then do really well. And there are markets that are doing good that are going to get smashed in the future, all right? Now, it sounds like I'm talking in circles, but you need to understand that knowing the general market of the United States as a whole isn't going to help you to get comfortable investing. What you need to know is your specific market and your sub-market. Now, I dive into great detail explaining how to understand this in my real estate investing course. And if you haven't snagged it already, push the link down in the description. I've included a coupon so that you can get $50 off. But I will tell you right now, understanding your market and making sure that you are in a market that the numbers work and that properties are going to continue to go up in value is so crucial. You need to be in a market where you know vacancy is going to stay low, where you know there's going to be a need for housing, where you know property values are going to continue to climb, and where you know that you can cash flow. And I'm going to talk about that more in the future, but you've got to understand your market and know the direction that it's heading. And if you do that, that is going to be key for making sure that your numbers work. Because if property values are going down and you're in a market where there isn't a need for housing, you will get burned. And that's why it's so important to know your market. Number two, the property matters. And I can't stress this enough. It's so important that you understand your actual property. Now, this is going to include your vacancy, what the rents are, all of those fun things, but it also is going to include your expenses. You've got to understand if you're buying a property that's going to be way more expensive than you're planning on. So you've got to make sure you get a good inspector in there and that you know what your expenses are going to be dependent on what kind of shape that property is in. I see so many people that they don't estimate their expenses properly, and so their return is not what they want it to be or what they expect it to be because their expenses are way higher. The other thing I see people do is they'll go in and they'll say, oh, this just needs a couple little renovations, and pretty soon what they thought would be a $2,000 to $5,000 renovation turns into a $30,000 to $40,000 to $50,000 renovation. And so all of these things can absolutely wreck a deal and put you in a situation where you hate your life as a real estate investor because you're not getting a return. You've just purchased something that is a money pit. So you've got to make sure you understand your property and you know what kind of expenses you're signing up for. And again, this is one of those things I've covered in detail in my course. And so if you want to check that out, the link is down in the description. So right off the bat, we've talked about the market, we've talked about the property. The most important thing for me, and the thing that I will emphasize over and over and over again, regardless of what anyone else says, is you can have it all. All right. What that means is cash flow is king and appreciation is king. I see so many people that say, oh, my market's great for cash flow, or oh, my market's great for appreciation. And here's the deal. A lot of the people that invest this way, I respect, I look up to them. I'm grateful for them and the success they've found. However, I will never invest in a market where I can't have my cake and eat it too. I know a lot of people say you can't do that. But you can. You can find a market and you can find properties within your market where you're getting huge cash flow and where you're getting huge appreciation. Now, does it take a little bit longer to find deals like this? Yes, it does. And I'm sure a lot of you are saying, well, Chandler, how do we analyze the numbers on properties? How do we know that it's going to get cash flow and appreciation? Again, you can check out my course, or if you don't want to check out the course, push this link right here, and this video is going to help you run the numbers and understand what a good property looks like. But I'm begging you, make sure that you make the numbers the priority. Make sure that you understand your market. Make sure that you understand the actual property and the expenses, and then make sure that you don't settle, that you get your desired return with cash flow, that you get your desired return with appreciation, and that you make sure you capitalize on all four of the pillars of investing in real estate, from cash flow to appreciation to principal paydown, which requires you to get a loan. You've got to use leverage when investing in real estate, and then finally get a good accountant so that you can get the huge tax benefits that investing in real estate provides. And if you do these things, I am telling you, it does not matter what's going on in 2020. You can find a deal that will do incredibly well and yield a huge return for you, not just in 2020, but forever. Every year that you own this property, it's going to appreciate more. It's going to cash flow more because you're going to raise rents, and it's going to continue to yield principal paydown and tax benefits. And so I am begging you, don't get scared because of the craziness, all right? Buckle down, figure out your numbers, and make sure that you do what's required to jump into the market, because here's the deal. Everyone wants to wait until the market is at a low, but somewhere the market is always at a low. And you can find those properties that are under market value if you hold to your strict criteria and follow all of these steps. And if you do that, again, you're going to get a huge return. And as always, my goal for you is to be able to get a huge passive income. And as you follow this strategy and invest in real estate in every market, finding those deals where the numbers work, you're gonna be able to build that huge passive income for yourself. So if you enjoyed this video, please push the like button, subscribe to the channel, and hit the little bell, and I'll look forward to seeing you in the future videos. Thanks so much, guys. Have a great day.